Yeah, good day, everyone. Good evening, good morning, good afternoon. Hello to everybody all over the world. Yeah, my name is Yusuf. I'll be handling tonight's class once again. I welcome you back for everyone that participated in the last class. So we are going to move on and continue where we stopped the last time. But before we move on, we'll quickly do some few recaps. But I want to implore you, in order to get utmost value for this we are doing, if you know you miss any of the episode, try and get it on the YouTube channel that it has been posted, because this class is a continuous one. It has been started for like 2-3 weeks now, and we are actually doing it in connection with the previous one that we have finished. I want to implore you, let us try to pick up some pen in order to join some points, to jot some points down, because the information we are going to be unleashing here, you just never can tell. It might be helpful. Although some people may know all these things we are trying to discuss here, but this effort is just for the purpose of keeping people abreast, in order to follow up and actually understand how the market actually flows, how the charts, the market movement, the price movement of each of the coins, how it works. So through the charts, we'll be able to interpret the attitude, the actions being taken in the market by the buyers and sellers. And by understanding the attitude, it will be a great advantage for you to decode. You will know what the buyers are doing at a particular time, which will allow you to prepare or determine which action you as a trader you are going to perform next. So without wasting much time, I'm going to move on to my screen straight up. I'll be sharing my screen now. And I hope you can all see my screen. Kindly acknowledge if you can actually see my screen. Kindly acknowledge, please, if you can see my screen. I need that. Okay, good. I can see thumbs up. Thank you, Mr. Philip. Thank you, sir. So I can move on with this reaction. Thank you so much. This is actually where we stopped the last class. Please, I want to repeat this once again. Please and please try to note any salient point that you can see that happens to be useful for you. I repeat myself, it is possible for you to understand all these things. You may be like, what are they doing? I already know all this, but you just never can tell. Just little information that we might share here may go a long way for you. So let us begin. We actually stopped here the last time. We stopped at indecision candlestick patterns. But before I move on, I want to quickly recap. We talked about bearish engulfing pattern the last time, where we talk about bearish engulfing as a sign that will show that the market is going down. That is a sign. But it is just a sign. It's not a full proof. It's not a total confirmation. It is only giving you a tip of what the direction of market might be. So you don't just pay attention to what you see here alone. I mean this bearish engulfing pattern. We have talked about bullish engulfing, bearish engulfing a lot. So it's been a long journey. So I won't be able to do the recap from the beginning. But let me see if I can to undo what we call previous knowledge a lot. So permit me if I can do that. This is candlestick, as we have said. What is candlestick? This is exactly what candle look like. Look at this once again. This is candle. The green candle shows a bullish. That is the market is going up. While the red candle shows what? Bearish. That is the market is coming down. We should note that. The green shows upward arrow. It shows that it opens from the bottom and closes at the top. While the red opens from the top and closes at the bottom. That is candlestick. So the greens are the bulls. When they say market is bullish, that is the green shows that the market is going up, and the red are the bears. That is the market is coming down. So moving on, we talked about another shape of candle, which is what? Hammer. You can see it actually looks like hammer. What is the interpretation? Everything has been handled on the past episode. So from that, it shows that the market is the market was down before, but it was later going up. That was why it erased the body up to this. This body, this place I circled, it was red before. That means it was coming down before. But because it was rejected, it became just a line. So it now forms little body at the top. There's a recording for that so that I won't waste much time. This is bullish engulfing pattern. The bullish is saying that the first candle is red, it was coming down. When it closes here, the candle closes at the bottom here, then another green candle started from this place and started going up. So for bullish, for you to recognize bullish engulfing pattern, you'll see that the green candle will be taller than the previous red candle. That is bullish. So when you spot this kind of shape in a chart, it is actually telling you something. So what is it telling you? It is telling you that the market has the tendency of what? Of going up. So it has already come down. Then the green candle shows another force that they are taking charge back. So it is telling you that. And in some smaller time frame, I don't want to confuse you. Don't let us go there. Just a tip that the market is going up. But with some other confirmation, let's say you have already checked your fundamentals, the news favor you, the Royal Q top losers favors your tip. Then you saw some other thing on economics and all. Then by the time you check the chart on your candlestick, you actually saw that it is on downward trend and it gave you bullish engulfing pattern. You can see by connecting all of that, you see that it is favoring your decision that the market will be going up. After that, we also have piercing pattern, in which the first one was red candle coming down. Then the second candle is green candle, but it is 50% section. From this point, buyers took charge and they pushed it back up to this level. Then the following candle started again. The following candle started from here and started coming down. The buyers pushed up again. That was why there was a line and it's like this. That is Tweezer bottom. It shows a very strong force of buying. That as sellers are selling, the buyers did not give up. They were trying to push up back. If you can crack this and interpret all this candle well, it will really tell you, the candle is actually narrating a story. It is telling you, it is writing history. It's as if you are an historian, you pick up a pen and you are writing, you are noting down what was happening. What happened yesterday, there was a record of it. So tomorrow, you'll be able to have access to what happened throughout the whole 24 hours of yesterday. That's the essence of the candlestick. It is just recording that history. So it is that history that will now tell you that, okay, this is what might happen next. When the candle shows that there are too much of a buy, you will know that anything that goes up will eventually come down. Then following that, morning star. This is a shape of morning star. Look at this. You first have a red candle followed by doji, this plus at the middle. That's what we call doji. Then you have a green candle, that's morning star. Then look at this chart. The chart is actually showing those signs. When you spot morning star at downward movement, you see that the trade is downward. The trade is downward at the downward movement like this. Then it's on top of the support. So on the support, you actually spotted morning star. It is a sign that the market has actually sat down at a very strong support and preparing to what? To moon. Looking at this chart, you see that it's actually moon. It goes up. But mind you, as we always say, do not bank your decision on just this chart alone. There are some other confirmation that you can exploit in order to allow your decision to be very rich. So moving forward, we also have another chart, which is a bullish engulfing. Look at it. This is bullish engulfing pattern. As we have explained earlier, the first one was red candle. The second was green candle. The green candle is taller than the first one. That's a bullish engulfing. And mostly when you spot such at downward trend, you can see this is downward trend. Then when you spot the bullish engulfing, is a sign that it has sat down at the bottom and preparing to what? To go up. Mind you, do your confirmation with other yardstick for you to judge too. Thank you. So moving forward again, we okay, there's another bullish engulfing pattern. Look at it. So the same trend. So let's move on. Then we talked about bearish reversal candle. The bearish is just that the market was first bearish. That is, it's the market was coming down, then it later goes up. Then shooting star. Look at this shooting star now. It's like an inverted hammer. Look at it, and as if they turn hammer upside down, an inverted hammer. So this means that there was a bullish before. This place you have a line. It was bullish, that is, the market was up before. But later, sellers later sold some portion of it. They sold it up to this level. That was how it remained this little. They got to this place, they continue selling. You know, from this line up to this line, it was green. But because there was a sell back, there was a rejection, people were selling. They sold off the old green. Then they continued selling. That was how they had this small red. So you should be able to interpret this and determine what actually happened based on the shape of the candlestick. Then bearish engulfing. This is more of like opposite of a bullish engulfing. See, we had bullish engulfing at the top where we first had a red candle. We had red candle. Then we have secondly green candle taller than the first red candle. This is bullish engulfing. And you see, this is green. This is okay. This is red, and this is green. But this is opposite bullish engulfing pattern. Moving forward, we also have dark cloud cover. This is dark cloud cover. So by the time you get used to this thing, you won't have to memorize those terminologies, but you understand the reaction of the market movement based on that shape. Now we have tweezer bottom, and this is now tweezer top. The tweezer top is like those hammer, they are upside down. What is the meaning of that? Looking at this, you see this line you have on the first green candle. It is showing that at first, the market started at the bottom here from this green bottom. It was going up like this. It got up to this top line and people started selling. They now sold it off. They sold it off up to this place. It now remained this smaller green. Why did I know that? Because I can see based on the shape of the candle, you must have known that the green candle was first, it started from here. Then it was up like this, up to this. But later when sellers started selling, they sold off this part. They sold it off. That was why it remained just a line, then the remaining green. That's a tweezer bottom. But for this red, you must have seen this, that at first, this other second red one on the tweezer top, this one. So how did the candle started? I can actually tell you how. So this is how. The candle actually started from, the candle started from here. It started from this line I drew, then it was going up as a green colored candle. That was how it started. It was going up as a green colored candle. Later, the sellers took over and they sold it back. They sold it off. They sold the old green to the last place where it opened. You know, I said it opened here. Then they continue selling. That was how you see I have this red like this. So that's tweezer top. So moving forward, this is evening star. This evening star is more of like opposite of what? Morning star. So because if you remember morning star, you have something like this. The first one was red. You had a doji, a plus sign. Then the second one was green. This was green. This was red on morning star. But on evening star, you first had a green candle. It goes up. Then when it got up, you had a doji at the top. You see the morning star, the doji was at the bottom. Then after the doji, the market started going bearish. It was coming down. So this is telling you that the market started with green. Later, it came up with indecision, but later the seller actually later took over the market. So when you spot this evening star at the top of an upward trend, you spot it around here, it is telling you that a sign that the market is coming down, but you have to make some other confirmation to conclude. Thank you. So moving forward, this is how to find the probability. This is a live chart that actually shows something I just explained. Look at it. I said when you spot bearish engulfing pattern, this is bearish, just opposite of bullish now. You spot bearish engulfing at resistance here. Resistance, you spotted it at upward trend. Number one, upward trend. Number two, resistance. Then number three, now you see the word, the bearish engulfing pattern. Bearish, these are three tips that you saw. You saw it at an upward trend. You saw it at a resistant line. Then the third one, you saw bearish engulfing. These three is telling you that market has tendency of what's coming down. And looking at this chart, you can see that it actually came down. So moving forward again, is another bearish engulfing. Look at it. At an upward trend, sorry about that. Okay. So look at this again. This is second chart again. This is also what? An upward trend. Number one, upward trend. Then number two, it has what? Resistance. Then number three, it has what? Bearish engulfing pattern. So these are three signals that you have. It shows tendency of what? Market coming downward. So let me quickly move forward to start the class of the day. We are starting now. I'm sure you must have gained something based on our previous knowledge. One, Today's, what do we simply mean by indecision candlestick? It can either be called what? Spinning top, or doji. Look at it, spinning top or doji. So now, what is spinning top? They are explaining spinning top as something like this. What we have here, this is what they call spinning top. It is actually a plus sign, but it has a little body. See, it has a little body like this. That's why they call it a spinning top. There's another one that we may have that may not have any body at all. It will just look like a plus sign. Look at it. This is doji. So just like it was explained here, see, you either call the first one spinning top, this, then doji, the second one. Doji is that plus sign, the one we just saw now. So now this is doji. Doji represents indecision in the market as both buying and selling pressure are in equilibrium. What doji means, I think I explained it the last time, that neither the buyers nor the seller wins the market. If the market opens from here, and if it's going up like this, it will form in a bit, traders are buying. But when seller now came in and they sell back again up to this level, it will turn this back to something like this. You know, the line started like this. First, people were buying. It formed a body in green color. But when sellers were selling again, they were selling and it turned into a line like this. Then seller continued selling down like this. When they were selling down, from here it will form a line, but up to this place it will form a body. Then buyers later buy up again, up to the point at which it started. So with doji, it actually opened here and also closes at the same point, like this. Look at it. It opened here, market was going up, green. But later, sellers were selling again. Then it came down with just a line. They sold below where it opens, like this. Then buyer again, they took over. Then they pushed the market back, and it now closes where it opened. That's where we have doji. That is the situation where we normally, that's why we say it is an indecision. Neither the seller nor the buyer wants the battle. So under doji, we also have what we call dragonfly doji. Then we have a gravestone doji. Dragonfly, then gravestone. What is dragonfly doji? This is it. How does this candle form? We need to know. How does it form? This candle, before a candle can be like this, it is obvious that it opened from here, Abi. So this means that as the market opened from here, it was coming down. It formed a body like this, color red. This is how it formed up to this level. But later, the buyers option also pushed back again. You know, it formed a red. See my arrow, it was coming down. Later, from here again, the buyers now came in, they started buying, they buy up to this point again, like this. So they pushed all this body, they pushed it back and formed a line. It now ended up with this shape. That is where we have it. So on this dragonfly doji, this place is where the market opens. And this place, the same place is where the market closes. That is the interpretation. I'm sure you are getting it. So for the second one, which is what? Gravestone doji. How does this candle form? And what is the interpretation? Okay, sorry. Let me quickly talk about the interpretation of the one at the top. This is saying that at first, it was the sellers that pushed the market. They pushed the market from the entry point, from the open. They pushed it with red color like this. Then later, the buyers also took it from where they finished here. See, they now push the market up again. See, they pushed it up back to where it actually started. That's why you have this one cancel this one. That's why they said nobody won. Both of them actually died. So it now remains traces, just the traces of the line that some people sold, and another traces of the line that buyers pushed it back up to the same edge. That was how we have something like this. Now, this means that it was sellers that were first selling in the market. They were selling. They were selling. They have sold up to this bottom. And later, the buyer took it again and they started buying up. Meaning that they pushed up the market up to the level the seller started it. That's the dragonfly doji. Now, unlike the real doji, which opened and closed near the middle of the range, the dragonfly doji opened and closed near the eyes of the range with long lower shadow. This tells you there is a rejection of lower price as buying pressure stepped in. Look at the comments here. Look at the comments. Let me use this word. It's more sharper. See, the comment says that there is a rejection of lower prices. There was a lower prices, but later the buyers rejected it and they pushed it back up. Then we have something like this. So meaning that there was a strong buying pressure. That was why the buyers, they were able to successfully push the sellers back and push the market up. That shows an upward force. There was a strong buying pressure. Then for Gravestone Doji, it is opposite of what we had. Before, the market was going up. Look at this line. This line tells you that the market opened here and it was going up. It got up to this level, and later the sellers took over from here. They took over from where they stopped buying, then they were selling back. They sold it down back to where the market opened. Then this means that at the bottom here, the market opens here and it also closes at the same spot. That is where you have a Gravestone Doji. Then the interpretation is showing that there was a stronger selling pressure. The buyers has already took over initially, but later the seller pushed it back. They rejected it up to the last moment, whereby they erased the whole green color. See, there was full green color here. Let me draw another one. There was full green color like this. Then when red came, the sellers now, they pushed it back with their own red, so they pushed it back where it started. That's where you have this. So this also cancel this. That's why we call it indecision, doji. Neither the buyer nor the seller won, because if you look at it, they have the same height. They have the same height of buying and the same height of selling. At first, it started with the same height, with the height of buying. They bought up to this level. But when the seller started their home too, where buyers stopped, they also sold up to the same level. That's why they call it indecision. So now this shows that buyers started dominating. Later, the sellers also took charge. So there was a strong sell pressure. There was a rejection, strong selling. That was why it pushed back the market down. The market was up like this because it started from here, but it was pushed down again. That's what it means. So moving forward, we're talking about continuation candlestick pattern. This continuation candlestick pattern signifies the market is likely to continue trading in the same direction. And if you are a trend trader, this candlestick pattern presents some of the best trading opportunities for you. That is, there are 4 continuation patterns you should know. The rising tree. This is what we mean by rising tree. Rising tree, that is, at first, the market was bullish. Then there were 3 consecutive small red candles. See, that's why they call it rising tree. So as you now locate these 3 consecutive red candle, then you needed a confirmation of green candle. After the market has fallen downward up to this level, and there was another green candle that took over and started coming up like this. This shows a very strong buy. That after the market has already fallen, it gives a buying setting, buying pressure setting. So let's look at it now. The rising tree method is a bullish trend continuation pattern that signals the market is likely to continue to trending higher. Look at it here. There is tendency that the market is likely to trend higher. If you look at the trend, it first goes up and it has 3 consecutive downward movement of red candle. So after the buyers have noticed that there have been a sell-off up to this level and there was a buy, this strong buy is the confirmation that the market is likely to push up. But here is how to recognize it. The first candle is a large bullish candle that is writing tree now. Then the second, third, and fourth candle has a smaller range and body. Look at this. Do you get? Then the fifth candle is a large body candle that closes above the highs of the first candle. That is, the last candle must be a green candle to show you confirmation. On the second, third, and fourth candle, buyers are taking profits, which led to a slight decline. However, it's not a strong sell-off as there are new buyers entering long at these prices. So this is what they mean. Look at it. As the market goes up like this, please, I want you to pay attention. I told you that this thing is actually telling a story. This candlestick, it is so interesting. It is telling a story of what buyers and sellers are doing in the market. You know, when somebody bought from here, let's say the price is $10 here, and the market moves up to this level, up to, let's say this place is $50. Somebody that entered at $10 and it goes to $50, yeah, such person has made profit. So with this profit, they will start selling. As a result of their selling, that's why we have this small red candle. There was a smaller sell-off from here. There was another sell-off again. They were selling small. There was another sell-off again. So after selling off up to this point, some buyers discovered that the price has come down, and they entered a buy again. As they were buying, the market started moving up again. So with this, you must have seen that some set of people have sold. So as they bought, as you see this shows a signal that there will be a higher buy, because this happening may attract more buys. People may want to buy it that it has already dumped. So that is the interpretation of the candle. Note, if you are familiar with Western charting, you will realize the bullish flag and rising tree method pretty much mean the same thing. Then falling tree now, it was just an opposite of rising tree. Look at this. They said this is rising tree. It first rose up from here. Look at this. This rose up. Then there was a slight sell-off. It continued rising again. Look at this. This was rising. After some tree came down, there was a rise in here. So this was rising tree. Then the other one now, they call it falling tree. That is, the market first came down, the price came down, then there was a little small buys. No, the buyers have noticed that there was a strong dip here. And when any buyer, any rational buyer that spotted a strong dip, strong sell-off, they may want to take advantage to buy. This was a panic buy. They just bought a little. Another person buy. They bought up to this level. And by the time they bought here, Those people that have bought from the bottom, they started selling off. That's how you see another stronger red candle. Now, for falling tree method, the first candle is a large bearish candle, that is red candle. The second, third, and fourth candle has a smaller range and body. The fifth candle is a large body candle that closes below the lows of the first candle. And here is what the falling tree method means. On the first candle, it shows the sellers are in domination as they close the session strongly lower. On the second, third, and fourth candle, sellers are taking profits, which led to a slight advance. However, it's not a strong rally as there are new sellers entering short and these prices. Then on the fifth candle, the sellers regained control and pushed the price to new lows. So that is it. This is telling you that if you have a falling tree method, there is tendency that what the market will be coming down after this has been formed. It is a tip of that the market was selling off. Later, some buyers set in, but another sell-off came. So when you spot this, it is tipping you that the market has tendency of what coming down. Simply put, just compare it with the first one. This is tipping you that this other one is tipping you that the market has the tendency of what going up. After you must have spotted a bullish, then there was a going higher. This goes higher than the first one. Look at this. This green candle is higher compared to the first green candle. This shows upward movement, while falling tree is a sign of what? Downward movement. Is a sign of downward movement. I hope this is clear. Now, moving forward again, Bullish Arami. This is Bullish Arami. So Bullish Arami, this is it. Most trading websites or books will tell you the Bullish Arami occurs after a decline in price. But based on this write-up, it says, I can't agree. This one of those things you must use common sense to filter out the BS out there. Think about this. A downtrend is created using the price of the few hundred candlesticks. Do you think it will reverse because a bullish Arami is formed? Let's move forward. Now, this is bullish Arami. The first candle is bullish, as we can see. First candle is bullish. Then the second candle has a small body and range. It can be bullish or bearish. This means that this one can be red or green. But when you spot something like this, this is a bullish Arami. Now, this is the interpretation. On the first candle, it shows strong buying pressure as the candle closes. On the second candle, it shows indecision as both buying and selling pressure is similar, likely because of traders taking profit and new traders entering long. Note, you can treat the Arami as an inside bar. They mean the same thing and can be traded in a similar context. Now, this is telling us that the price first went up and there was a little rejection, just little sell-off after the second candle. Then bearish Arami, just the opposite of that. When you look at bullish Arami, the first one was green, which is tall, followed by small red. Then bearish Arami on the other hand now, the first one was red, followed by what? The green candle. As it opened here and closes at the bottom here, smaller green candle setting. So this is bearish Arami, where it started with red. Then bullish Arami, which started with what? With green. Then the interpretation of these two. On the first candle, it shows strong selling. There are lots of sellers on the first candle, and it closes bearish. On the second candle, it shows indecision as both buying and selling pressure is similar, just like what we had on a Bullish Arami. Now, this is how to find high probability trend on continuation setup. If the market is in a range, then wait for it to break out of resistance. If the market breaks out of resistance, then wait for it to form a continuation candlestick pattern like rising tree method. Now, the third one, if the market forms a continuation candlestick pattern, then go long on the break of things, of the highs, then and vice versa for short setup. This is what it is saying. When it says go long here, I think I said that the last time, it says buy. That's the meaning of go long. It was explained here. Now it says if the market is in a range, then wait for it to break out of resistance. So this is what it is saying. When it is in a range, you need to allow the market to break out of resistance before you decide to buy the trade. That is, if you have something like this and it is within a range, wait for it to break out a resistance like this before you go long. Then rising tree method and bullish Arami. Look at this. This is what it was explaining. You know, this is a resistance line. This is a resistance line. This line. See, this is a resistance. Sorry. This is a resistance line. This is, there was a support line at the bottom here. So now you have to allow it to break through the resistance. That is, it has pierced the line. It has gone above that resistance. Then again, you now spot what? Look at it. You spotted what? Rising tree. Look at it. This is rising tree. You spotted it at the top. You must have allowed it to break out of resistance before you go long. Go long means buy. So when you see that, now the list of confirmation you are looking at now, there must be a breakout. Breakout must happen. Breakout of what? Of resistance. There must be a what? There must be an upward trend. You can see it is actually a resistance. There was a support at the bottom, making two. Then number three, there is a sign, which we call what? Rising tree method. So with this tree confirmation, it is an hint, which is telling you what the direction of market will look like, which means it's going up. So at a glance, there are some people that quickly make upward trend, upward. Number two, as it broke the resistance. Then number three, can you spot the what? The rising tree method. So by still getting this
Am I the only one not hearing Mr. Yusuf clearly again?
No, same here.
Same here too.
cheat sheet.
Can't hear him again. I can't hear him again. Can't hear him.
Of the body to the. We said earlier, I told you that this thing is actually narrating a story. Look at what the script is telling us here. If you have mastered the movement of the candlestick, you will know what the situation are. And interpretation of the green. That is, the arrow inside is telling you it's going up. The arrow inside the red is telling you it is coming down. Let's quickly move forward. Then, looking at this, we talked about this earlier too. Look at these two. These two is telling you that at first, the market, this one you are looking at, first, originally, it was like this.
Mr. Yusuf, the network is breaking.
From this top to this point.
Hello, Mr.
That's
Hello, Mr.
why
Yusuf, the network is breaking. The network is breaking.
Okay.
Network from your end is breaking.
Let me check.
Can you recap from the previous candlestick?
Try. So it has been. Can you hear me now? Am I audible now?
Yeah.
Huh?
Yeah.
Am I audible now?
Yes, sir.
Hello? Hello? Am I audible now?
Yes, we can hear you now.
Thank you.
You can continue.
So I think from here, right? Did you hear me up to this level or up to this chart? Did you hear me up to this chart?
Yes, you can continue from this place.
Okay. Now, I was talking about some yardstick in which you determine here. As I've explained, rising tree and falling tree. There are some consideration you make before you decide either you buy. You look at the support and resistance, then you must have observed that the market is going up. The market must have, this R is resistance, this S is support. The market must have broke through this line above it. That is number one sign. Break the resistance. Number two sign, the market must be an upward movement, just like you see, upward. Then number three sign, you must have spotted this rising tree sign. This rising tree, let me zoom. Let me zoom it so you get it. See this rising tree sign, this sign, you must have spotted it. So with these three yardsticks, it will tell you that the direction of the market has stronger likelihood of going up, just as it is there.
Hello, Coach. I cannot hear you again. Oh.
I think it's general. It's general.
Yeah?
I cannot hear you again, sir. It's breaking, sir.
Everybody?
Yes, sir.
Yes.
I cannot hear me, and I can hear you.
I cannot hear you, sir.
We can hear you as you speak now.
Hear you now.
Go ahead. We hear you again now. We can hear you.
Okay. Now for this network today. Even my phone is showing 3G. I can see the network is not strong. It's supposed to show 4G. Let me quickly, we are almost rounding up. This is 9:30. So let me try to wrap up for tonight. So I'll give room for question. So moving forward, this recap, I think we have explained it before. I have tried to explain it at the top. The green shows the market is up, the red shows the market is down. Then for this one, this is this shape. This shape is telling you that there was a buy initially. There was a buy initially. Later, there was a sell-off up to this area. Up to this area. That was how it now, this is just how it is. Let me make it bigger. I'm trying to draw up this now. Please pay attention. It was first like this, green color. Let me use green color. This candle now, it was first like this, color green. But later, when it was going up and it got up to this place, there was a stronger sell-off. The buyer was selling off again. They sold off up to this point. If you look at it, they sold it off up to this point. That was how it formed this one. Then for the second one, there was a sell-off initially. Right from here, let me use red color. Right from here, there was a sell-off up to this point. Sell-off like this. But later, the buyers now came in from where this one stopped. The buyers took over, they came in and they buy back up to this level. That was how it formed this point now. So I'm sure you understand that. So what again? Then a weak price rejection. When they say weak price rejection, when you are reading the news and they talk about weak price rejection, this is what it means. People have bought heavily and there was just a little rejection, just small sell from here to this place. See, this is just the small seller. That's what they mean by weak price rejection. That means the buyers are still buyer control. So when they see that the market will pull up more. Let's see what they wrote here. This tells you the buyers are in control as there is a minimal selling pressure in the short upper week. See the statement here. It is telling you that the buyers has a strong, and I told you this line can be called weak, tail, or what's the third one? Shadow, anyone you call it. So we have very small weak here. Moving up, strong price rejection versus weak bullish close. Look at it. This one, I think, is similar to what I explained earlier. Look at this. This one, there was a strong buy before. You know, the other ones explained that there was a weak price rejection. That's how it looked like. Let me go back. Look at this. The one at the top shows weak price rejection. That is, it has very small. It has very small weak. This is what they mean by weak price rejection. This is what is weak. This little one is the only selling that happened. The buying still stands. But here, the price were first like this. It was green up to this level like this. But seller now sold off. They sold it off and remained just small green. Now, this one explains a strong price rejection. Look at it. There was a strong line. There was a stronger line compared to this one, the weak price rejection. I think that is well understood. Then, so if you have followed this up very well, this will explain that you can read candle very well and interpret it. By studying this lecture right from the onset up to this level, now you have what it takes to read any candlestick pattern without memorizing a single one. And I'm sure when we go back to live chat now, you'll be able to tell me what happened in the market. Let's quickly go to that before I round up. This is 9:35. I'll be taking questions soon, but let me quickly go to a live chat to show us what we have been explaining so far. My Binance. Okay. Okay. Okay, let me go to BTC. So looking at this now, you will see I'm sure you'll be able to give it name based on what you have learned. Look at it. This is Doji. You can see Doji. You can see when they were talking about price rejection, strong price rejection and weak price rejection. See. Okay, let me show you. See now, this one, this is a very good example of weak price rejection because it only has very small wick on top of it. Do you get? But there are some others that are very long. Look at this one now. This one is long. This one is long. It's not that strong, but compare it to this one. Let me check for another one. This is a strong price rejection. Look at this now. This is a strong price rejection. So with this, you'll be able to see what we have learned so far. Look at this now. We were talking about indecision, where we talk about what? We talk about dragonfly doji, then we talk about doji that will look exactly like a plus sign. Let me look for another one that look exactly like a plus sign. Look at this one now. Look at this. Look at this. That look exactly like a plus sign. This is a doji. Do you get it? So all these things, they will go a long way in helping us. Then the time frame, we have already discussed the time frame, 1 minute time frame. We see how it is forming. Look at it. So this is 9:38. It is forming new one. By the time we get to 9:39, another candle will start forming. So these are the things. There are other ones. Look at this. There are some other candlestick candle that they would not have anything. See this green and see this red. They neither have. They didn't have any wick at the top or at the bottom. The full body is just a whole body. There was no line at the top. There is a particular name you call that, Maribuzo. So it's actually telling you a very, very strong buy. When you see something like this, it's also a strong buy. It has neither of the weak. So it has tendency of going up. When you see it on what? On downward trend too. See, look at new candle. Look at how it is forming. New one has formed just now. Look at it. Look at it. So this one is telling you with this 1 minute time frame now. Look at the last candle is also showing that there was no wick at all. So this one in the long run, it has tendency of still going up. Based on this, I didn't do any other fundamental and all. But when you look at it, it has just tendency. I don't have confirmation yet. But I'm saying that's why we say we keep hammering on confirmation. See, it is now going up. Because this is already telling me this Maribuzo, it doesn't have any wick. It is saying there is a strong buy. There are people that are buying. But you also have to consider other things. Is it on a downward trend or an upward trend? If you spot this at upward trend, it might be coming down. But if you spot it at what? Downward trend, it might be going up. Look at it now. It is near to what? To upward trend. So this means that these people that have green candle all through, they will sell and take profits. So let me stop here tonight and give room for some question so that we will make clarification. I think somebody is writing a message. So let's give room for questions. If anybody have question, kindly signify by raising up your hand so that we are going to treat the